welcome to the edition of the Personal Finance Panel for this year's budget. I'm your host, Brian Hirsch, with my guests Harry Joffe from Discovery Life and International, and Michael Kransdorp from the Institute for International Tax and Finance. By now you've been brought up to the date with the salient features aspects of the budget, and our funds are going to be collected and distributed. To summarise, there'll be more fiscal discipline, stabilisation of electricity supply, dismantling bottlenecks in rails and ports that have throttled exports and have raised the costs of doing business. As higher than expected VAT has been collected, the government has decided to withdraw 20 billion in tax increases included in May 2025, and if you remember, that was 3 budgets in a row. There's also mention that for small businesses, the capital gains tax exemption will be increased from 1.8 to 2.7. This applies to small businesses worth 15 million as compared to 10 million previously, enabling small business owners to receive more tax relief when they sell their business. Further funds will be added to police service and the judiciary. There will be additional allocations for education, and 1.5 billion will be added to maintain provincial roads. What a pleasure. In this segment, I'd like to unpack how the budget impacts on you, the individual. In my opinion, the budget was better than expected, and I'm pleased to announce there's no increase in VAT this year, so this budget is definitely going to stay, and there was no comment on NHR. But Harry, my first question to you. Last year we had no bracket creep. This year, bracket creep, and I worked out probably tax saving across the board of about 3.5%. Just explain bracket creep and what that actually means. And obviously there's still the behind the scenes comment to be made by Treasury on the budget. But just explain what bracket creep is and how it affects people.
Sorry, Brian, good evening first of all to you and your
I'm not sure it's good afternoon or good evening, Harry, but
I don't know where we are
you and I are used to good evening. Yeah.
But it's almost winter. So let's just say bracket creep is where you earn more and that pushes you into a higher bracket. And if those brackets are not increased for inflation, then you actually pay more on less. So you're earning just to keep you in the inflation band, and you go into a higher bracket and you just get taxed higher. So that's why every year what they should do, they haven't done, as you say, for the last 3 years, increase the brackets for inflation. Very importantly for me, Brian, I've got to add this, working for Discovery, the medical tax credits were increased this year.
And they didn't comment on doing away.
Right. Now, Brian, you read the papers prodigiously. You'd have read that article in the Sunday paper just before the budget, calling for it to be scrapped.
Yeah.
And I'm looking at my heart rate, and I just think about that, my heart rate goes up on my watch. But, I mean, so not only did the Finance Minister stand up to these people calling for the credits to be scrapped, but he actually increased them. I mean, not a huge amount, but enough for inflation. Just an interesting point, it was in the Business Day yesterday, that if they scrap the medical tax credits, 800,000 people are going to fall off the medical schemes and will be dumped back on the state system. So I think the Minister was very brave there, standing up to these people, increasing. And of course we'll come to just now, I'm sure, all the other thresholds that were increased.
Michael, some of the amazing things were increase in retirement annuities from 360 to 450,000. We had tax credits. We had now an allowance there whereby you can take out without exchange approval up to 2 million rand. We've also had donation tax increased from 100 to 150,000, and then obviously CGT, the band goes from 40 to 50, and if you die, from 330 to 440. And then from a home, although when you think about it, property prices have fallen over the years, but capital gain increased from 2 million abatement to 3 million. So were you surprised with these changes?
Look, Brian, I think this is great news. I mean, these limits that you mentioned haven't been changed in years, so they haven't kept up with inflation for many, many years. So this is a welcome improvement. I think the truth is that the Treasury recognises that personal taxes in South Africa are very high by international standards. If you look at the statistics, 50% of the tax in South Africa is being paid by 7.7% of taxpayers, which is very, very high. And as a percentage of our total revenue collection, personal taxes is very high by OECD and international standards. And I think this is an acknowledgement that we need to try and bring these taxes on capital down and encourage further investment in.
Michael, you mentioned 7.7 Now, is that low compared to other countries in the world? Because we're always being compared to other countries, and obviously how difficult are those who have nothing in this country. And by the way, Harry, just one thing: there was no increase. There was increase for grants, but there was no increase for the social ongoing benefit.
Yep. I mean, the other thing, Brian, which you didn't raise...
I'll come back to you now.
Come back to
so
me.
Michael, yeah?
Look, I think South Africa suffers from one of the worst income inequalities in the world, and that's also reflected in the tax statistics. So the wealthiest taxpayers in South Africa pay a much bigger portion of total revenue than in other countries, and that's because really our income inequality is so skewed. So that is quite a worrying statistic, that 7.7% of your taxpayers are paying 50% of your personal tax. If those people emigrate or die, you lose major.
Sorry, Brian, I'm going to jump in here. I'm going to interrupt you before you interrupt me. But if you look at the Henley and Partners Wealth Report, how many dollar millionaires are in South Africa? There's about 40,000 dollar millionaires in South Africa. Now you compare that to the UK, there's 3 million UK taxpayers worth £1 million or more, which is more than $1 million. So it just shows you what Mark was saying. We don't have a lot of rich people anymore. It's not like there's this, everyone says tax the wealthy, soak the rich. There aren't a lot of rich in South Africa anymore.
Yeah.
So
when you talk about 40,000 and $1 million, let's put that in perspective, because many of our people may be thinking in rands, it's about 16 million rand.
Exactly, and that's only 40,000.
Okay, we're going to pick up on, because you make the point about immigration. And we're going to talk about something that you are an expert on and you concentrate on. When do you become non-resident for tax purposes? We'll come to that in a moment.
Great.
Harry, just a question about the two-pot system. Now, on my last reading of the two-pot system is that 80 billion has been withdrawn since September 24.
Yeah, Brian.
19 billion paid in tax. Major impact, people don't realise, but no change to there. They still allow the 10%, 30,000 of monies as at the August 24, and then the 1/3 pot that's going into retirement savings.
Correct. I mean, Brian, the one interesting point though around retirement is the living annuity stuff. So I'll just go back to your other point. The studies are showing that not only is it happening round 1, but round 2. That's what was so concerning. So a lot of people have taken their first batch in their first year, are taking a second batch now of the retirement money. Yep. So you have almost nothing left in that savings pot and very little left for retirement. But the thing about living annuities, when you retire, you have to buy a living annuity now with your money, unless it's below 125,000. If your living annuity is just below 125,000, then you can cash it in full.
So
by the way, that
Harry,
went
I'll
up
just
as well.
stop you there. Just to explain again to viewers who may be first-time watchers, when you retire 1/3 in cash, the balance in the form of a pension, you've either got a fixed pension, you buy a living annuity. So you talk about where you make the decision. How much do I want to draw between 10.5 and 17.5, and to what risk do I want to take?
2.5 and 17.5, right? But so the point is, when that living annuity gets to 125,000 or less, you're allowed to cash it in full. You don't have to carry on with that annuity. By the way, that was increased to 150. They slipped that in as well. So it's now harder to cash in your living annuity. But the other point they've made is a lot of people have got...
Sorry, just repeat that.
So your day minimus for living annuities is now increased to 150.
Well, that makes it easier for many people.
No, it makes it harder because now your living annuity is going to be bigger before you can cash in.
Okay.
But I want to bring that in.
Oh, sorry, yes.
So the other point is, if you've got multiple living annuities, so a lot of people draw out of their RA, they buy multiple annuities. Now, in the old days, it was 125,000 per policy, right? And then suddenly, a couple of years ago, SARS started blocking that, and they said it's 125,000 per total, and that wasn't correct in terms of the law. So CISA went to National Treasury and said, fix this up. And we got quite a nasty surprise now in this budget where they said, no, they're going to fix it up, but not the way we wanted it. It's now going to be made very clear that it's 125,000 aggregated per insurer.
Okay. I'd just like Michael to come in here. Michael, when people leave, obviously the retirement, what's still in their retirement funds, they haven't yet retired, there's a method, you'll talk about that in a moment, of taking the money out. But living annuity is blocked.
Correct. So if you financially immigrate, if you cease to be South African tax resident after 3 years, you can take out your full annuity or your full pension and provident fund. But a living annuity, you actually can't. You've got to, even if you're overseas, you've got to keep on drawing it down, as Harry said,
so
between
then
2.5%.
If you keep drawing down that living annuity, Do you stay in the South African tax play?
Correct. Even if you're non-resident, you can still be subject to South African tax on South African source income. So if you're going to be earning income in South Africa, whether it's rental income or annuity income, you still will have to file a South African tax return. But the advantage is that you don't have to declare your worldwide income. You only need to disclose your South African source income, which really limits SARS's taxing rights just to South African source income, and your foreign income is sort of outside of the South African tax net.
Harry, has any request been made at any stage to the companies that if someone immigrates, you're allowing them to take their retirement funds where they haven't yet cashed in, but their living annuities blocked?
Brian, every week we get it. I mean, the law doesn't allow it, unfortunately. So, I mean, what do you do, Brian? We know the trick. You just draw 17.5% every year, and you deplete it as quickly as you can.
Yeah, but you can never deplete it because you can only draw 17.5% of the lower figure.
An interesting point, Brian. In the papers last week, they actually produced stats, which is the first time I've seen it. How many South Africans have actually become non-South African tax resident in the last 5 or 6 years? And it was 50,000 plus South Africans.
Which is really a drop in the bucket. If you think about a drop in the ocean, if you think about how many South Africans are living abroad, then, almost statistics show over 1 million South Africans are living abroad. Many of them are South African taxpayers, and only 60,000 have formally gone through the process of ceasing to be South African tax residents. So, to be honest, this is a major sort of gap in tax compliance with the SARS, that many people have just left the country and no longer file tax returns and avoided the exit charge, because they don't let you go for free. When you leave South Africa, there is an exit charge. You deem to have disposed your assets on the day before you left.
Right, sorry, where they get caught is, of course, when there's a death or an inheritance or a policy payout.
Yeah, correct.
Then, of course, and the kids living in London for the last 20 years, never formally tax immigrated. And then, of course, all the Forex rules apply. We can't pay the money out.
Okay, I'm going to ask you a question that I've got to remember. But, Michael, you must have done...
This is many of our clients.
Your level of expertise in that area, did you do all 50,000? Okay.
So why have you got such a fancy shirt?
Okay, before I come to you, I just want to ask you this question. I have someone who left South Africa 36 years ago. Bought a living annuity. Has just died. The total value, 180,000. They are giving the widow enormous problems because doesn't have tax returns.
Where does the widow live, right?
Well, the widow lives in London.
That is a problem. So they're going to have to go back and try and show some kind of leaving date and just try and regularize somehow.
So one of the benefits now, tax-free saving is increased from 36 to 46. You've got retirement annuities now from 350 to 450. However, Harry, that's how much you're allowed to deduct. But at the other end, no benefit on retirement tax. Has that not been something that's been debated? Because it's been there for a long time.
Yeah, I mean, it did go up a couple of years ago, I remember, Brian, from 500 to 550. So that was more recent than all the other stuff, which hasn't gone up. You know, the donations tax exemption last went up in 2007. So I think there was a priority which they had to get through. But I remember RAs, of course, the real benefit, Brian, is when you're inside the wrapper, you know, it's a tax-free wrapper in effect. So you don't pay any CGT or dividends tax or anything inside the wrapper. And there's,
Harry,
of course,
just point there, that's very similar to tax-free saving.
Yes, but just tax deductible
and in
going
a retirement annuity, you're getting the tax deduction.
And, Brian, of course, there's state duty benefits. And RA, as long as you don't have any non-deductibles floating around, is free of your state duty on death. So RA is a very efficient overall tax shelter. By the way, Brian, one more point before you go anywhere else. The state duty wasn't spoken about. So it's really interesting that increased donations tax exemption amounts, but not any corresponding estate duty amounts, because those two go together, those two taxes.
They did increase the estate duty a couple of years ago and didn't do donations tax at the time, so maybe they're trying to.
But even though up to 3.5 was also 2007, so the 3.5 hasn't gone up for years and years. They increased that rollover relief which you could get.
Okay, so let me just come back to your situation. And it really is, why would one? What are the advantages of financial immigration? And really, many people are so scared about it because they think they're going to give up the South African passport and all those things. So just unpack that for a moment.
Look, Brian, I think there's a lot of myths around this. It used to be called financial immigration, but it's now really ceasing to be South African tax resident. And basically, the advantage is that you limit what SARS has taxing rights to. South Africa has a residence-based system of taxation, which means you're taxed on your worldwide assets. And when you die, you tax on your worldwide income, and when you die, your worldwide assets fall into your South African estate. But when you're non-resident, South Africa's taxing rights shrink dramatically. Really, there are a few exemptions, but mainly South African source income is all that that SARS is able to access or to tax, and only South African assets would fall within your South African estate. So this is a major advantage, is that it reduces SARS's taxing rights. And also there's some big advantages for non-residents. Non-residents can earn capital gains on South African shares tax-free, which is a big advantage. And interest income earned from a financial institution is actually tax-free for non-residents. Those are the big
But there are different categories. Obviously, the people who've left years ago, young, went overseas, studied, never really applied. Maybe during articles they were paying tax, but then left the system. And there are those who left the system with assets.
Correct.
And then they had to do certain, they had to pay CGT, they had to calculate everything like that. So just talk about the category, particularly the category relating to parents who live here, elderly parents getting on in life, and now something happened to them and their children have done nothing.
It's a big problem. That's a lot of our clients come to us. They left many years ago. They've got elderly parents in South Africa. The parents pass away, and now there's an estate, and the executors want to pay out assets to the children, but they're still resident for tax purposes officially in South Africa, and they now need to go through this process of getting a tax number, ceasing to be South African tax resident with SARS, and sometimes, they don't have the documents from 30 years ago to show this.
And they don't even have a bank account.
Correct, yeah. So if they want the money to be transferred abroad to their foreign bank accounts, they need to be able to show the executors that they have formally ceased to be South African tax resident, and then have to go through that process. If you've got all the documents, SARS is actually quite efficient. It's normally about a month to 2 months to get the process done. But if you don't have the documents, that's the problem. If you don't have a valid South African ID book or passport, you need those documents to register on e-filing. So it can be a nightmare.
Right, I'm going to show you the Punter Discovery product here. Before you even ask the question, if you've got an offshore product, if you've got an offshore endowment or an offshore life policy already in dollars, which is already outside the country, then you don't have this problem. And we've got so many of our clients who've got these kids offshore that have never formally tax immigrated. And we say to the South African clients, instead of taking a rand investment or a rand policy, take a dollar policy, which is already offshore, so your poor kid doesn't have these problems when you die. So
Harry, I'm going to give you an opportunity. I think you with me on Monday night.
Again, yes.
Yeah, so let's deal with that, because now people are still starting to say we're moving a little bit off the subject. But let me ask you this question. The overpaying of tax. No one wants, so the overpaying of tax, you're going to wait. Is it better to underpay in terms of what you're allowed to underpay, or better to overpay?
Yeah, Brian, it's a tricky question. I'm interested in what Michael's going to say to that, because obviously if you underpay and not legitimately, then there could be penalties, and you have all those understatement penalties and all the other penalties that arise. So, it depends if you've got a legal opinion, if you've got a legal reason to pay what you're paying. That's a very tricky technical and administrative debate more than anything else. Mark, I'm sure you have that a lot as well.
I think what people don't realize is that there's actually quite a lot of debt that's owed to SARS. If you look at the budget and you look at the statistics, there's over half a trillion rand in debt that is owed by taxpayers to SARS. SARS collection has actually been terrible over the last few years, and they're ramming that up quite dramatically. So what we're seeing is very aggressive tax collection, letters. They've hired lots of legal people to go after taxpayers. So people are getting quite. We got people phoning, distressed when you get a letter to say that you've been handed over for collection. There's a summons out for you. So SARS is actually tightening up on that quite dramatically. They were very laxed over many years.
I'm amazed at the number you give me.
Yeah, very.
I thought SARS were one of the most efficient departments.
That's the impression.
Yeah, that's what I thought.
No, there's it's a major issue. You're $500 billion in uncollected debt from taxpayers, and SARS is really desperate to sort of improve those statistics.
And Harry, South Africans living in South Africa but working abroad, I think at one stage you're entitled to at 1.25. Yeah, that hasn't changed.
That hasn't changed. But remember, those are very technical requirements as well before you get to 1,250,000.
Just explain it.
So you've got to be working for an overseas employer, you've got to be outside the country for a certain amount of days, of which 60 have to be consecutive. It's 183 days have to be out of the country. And you have to be working for an employer. So we've had a lot of clients that are self-employed, and then this exemption is a problem that doesn't apply.
Yeah. And Harry, when you look at South African companies, I mean, look at our gold mines, you look at a lot of the big companies, they are overseas employers.
Well, it's an interesting question, Marco, if they are. I mean, it depends which office he's employing in. I know with us, we route everything through our South African office, and then it's not an overseas employer in effect, because we don't want branches offshore, we don't want permanent establishments offshore. Everything gets done through the South African office. So a lot of those companies actually.
So let's talk, for example, Billiton and British Tobacco and some of the gold mines and even Richmond. They have operations here.
Yes. So, but it depends where the person's physically based. So, if they're working from South Africa or they're working from
they're
overseas.
working abroad.
Fine.
But they're subject to the
Which
South
office
African.
is paying them, right?
Yes, which office is paying them?
Which
Is it
office
still
is
through
paying
the
them?
South African payroll, or is it, that's also important. On this issue, I mean, remote work is actually quite an interesting topic, and it's quite, on the other side of the coin, we deal with people, these nomads that are coming to South Africa and working remotely is actually very popular in Cape Town, become a thing. And South Africa, it's quite complicated. If you spend too much time here, it might require your foreign employer to actually withhold PAYE. So you've got to be quite careful how that works. And SARS has re-looked at that because they thought their requirements were too wide. They've actually narrowed the requirements for foreign companies to withhold PAYE on employees that are working remotely from South Africa, which is actually quite a good thing because that was causing quite a bit of chaos.
Harry, your overtake on this budget?
Yeah, Brian,
Pleasantly surprised?
I think these tax thresholds being increased, I mean, as Michael says, it's long overdue, but no one expected it. So I think that was a very pleasant surprise. I mean, some of the CGT stuff, some of the RA deductibility stuff, which is quite substantial, the increases. The SDA gave from 1 to 2 million. Again, that hasn't gone up since 2011. So it should have gone up, but again, everyone's been asking for this for years. That was quite pleasing that now it's finally
The foreign exchange allowance.
the foreign exchange SDA single
but
discretionary
the
allowance.
maximum still stays at 10 million.
Yep.
But you can make an application to SARS. I had a client recently. He bought a property in London, £9 million. He made an application to SARS for 133 million.
I'm sure, yeah.
They gave him permission.
But the 2 million very important for most South Africans because people don't want to go through the application process. They don't want to start spending money on advisors. This is just a straightforward. As long as you got a tax number, your green ID book or card, you can take your 2 million out. There's no admin blockage. Whereas the 10 million is trickier. I mean, if your tax returns
You've
are
got to
behind,
give so much information. They really dig deep. Michael,
The frustration, though, for me is that it's unfair because South African tax residents are entitled to the single discretionary allowance every year, but non-residents are only given a once-off allowance in the year they emigrate. But in
that's
subsequent
additional
years,
10 million or something.
they have to apply. Every time they want to remit
Yeah.
capital, they have to apply for I've been making the case to National Treasury that that's unfair, that residents and non-residents should be treated equally and they should also be entitled
And
to
Brian, the tricky part that we have
allowance.
with a lot of our clients buying our dollar life product, the South African could be living overseas, not formally tax immigrated, and it's not clear whether they're actually tax resident. And then we don't give them the 1 million or the 2 million because we're too nervous. So we've got a client now who's an English teacher in Canada. She's been there for 4 years. We say to her, where's your home? She said, I've got absolutely no idea. I might come home, I might stay in Canada, I might go to the Cayman Islands. Then when she wants to buy offshore products, we won't give her the 2 million because we're too nervous to breach Forex. And that's a problem. It should be made much clearer as well.
Michael, just thinking myself now, 2 million is an enormous difference, because a husband and wife can actually export 4 million.
Yes. So it's
Harry,
very-
can a husband and wife buy a joint endowment? Do you allow joint endowments?
We do, only with spouses.
Yeah.
So anyone else, the Forex is too tricky. But it's 4 million, and then plus, of course, you can apply for more if you
Okay.
need to take more.
Okay. Last comment before I close off. Budget, in your opinion?
I think it was better than expected. It's nice to have a welcomed relief on tax rates. They didn't do anything serious. There are no real major adjustments. It's more tweaking at the edges. But definitely people are going to be better off because of this budget.
Well, I've not had sight of the new tax tables, but in summary, you'll be paying more for alcohol, cigarettes and petrol because of bracket creep. Everyone will save somewhere around about 3.5% in tax. I'd like to thank Michael and Harry for joining me at this program. I hope that's given viewers some view. We all agree, better budget than we expected and some little bit of tax saving. Thank you for watching. Good night.